Hey guys, everything done it's on here. This is a Zero Hedge article. This is about the real estate crash and that it's coming real soon, and there's big buyers that are starting to dump assets, or big holders, I guess, of real estate that are starting to dump assets because they see the economy is in trouble, and they figure it's time to get out now. Another real estate crash looms. Zell dumps holdings, warns the Fed's deferred reality for far too long. If you haven't heard yet, median home prices in the United States are on a tear, having reached all-time highs in April, which sounds good, right? To boot, rental prices have gone insane, showing a year-over-year inflationary increase of 8%. On top of that, stock markets are rocketing back to their own all-time highs based on the premise that the U.S. economy is seeing healthy growth. By all accounts, it appears we're back on track, by all official accounts. But appearances can be deceiving, and highly acclaimed investment guru Zell isn't buying the hype. In fact, he's taking the opportunity to sell in a very big way. Now, what the smart money will do, if they are smart, is that as the economy is on the increase, they will sell their assets when it's at the high, basically, or heading higher, and they will sell all their assets before it drops. And I think that's what Zell sees here, and he's selling right now because it's going way up. Wolf Richter explains, and he has been selling. Back in 2007, he once again proved his sense of market timing. As the commercial property bubble was already teetering, he sold equity office properties trust to Blackstone for $23 billion, not including $16 billion in debt. Then prices crashed, and commercial property defaults hit the bank. As the dust was settling at the end of the Great Recession, he went on a shopping spree. Now he's selling again, unloading multifamily properties at peak prices on a massive scale, just when a multi-tier construction boom was flooding the market with new supply. So what he did was, prior to 2008, 2007, he sold all his properties, and then the crash happened. At the bottom of the crash, after the crash, at the bottom of the market, he bought all the properties again, or new properties, and now he's selling them again. He sees a big crash coming, and he's going to make a lot of money on it. So when Zell speaks, ears perk up, it says. In a recent interview with CNBC, Zell noted that zero interest rate policies are removing the risk of borrowing, making it easy for banks and finance companies to keep pushing supply on the market. Overall, we've come off an extraordinary period of liquidity and an extraordinary period of low interest rates. I think we're likely to see a repeat of that going forward, and I think we're going to see more supply in what had been pretty tight markets. In the most simplistic terminology, I would ask you a question. If something is free, is it valued? Is it appropriately risked? We have distorted markets. Maybe we have bubbles, he says. And just finish it off here. The problem is, I think the Fed have raised interest rates 2 years ago, and therefore would be able to make a much more rational decision as to what to do. I think the Fed should have raised rates 2 years ago, and therefore today we would have been able to make a much more rational decision as to what to do. The problem is that they've so deferred reality for so long that I think they have a serious credibility problem if they don't raise rates again. So they're going to lose, people are going to lose confidence in the Federal Reserve if they don't raise rates, because if they don't raise rates, that means the economy is not doing better. And the Federal Reserve is supposed to make the economy better. And the proof is in raising rates. It means, if the economy is doing so well, they would be forced to raise rates because it's getting so hot and they want to slow it down. But the economy is not doing better, so they can't raise rates. So that means confidence is going to be lost in the Federal Reserve, and therefore the U.S. dollar as world reserve currency. And people will then start trying to get out of it. Everything seems to be booming again. And easy money, easy lending, rising prices, and a bread and circus populace. Never mind the nearly 50 million Americans on food stamps, the 6 million millennials living in parents' basements, or the massive spike in business debt delinquencies. Should Americans be preparing for another collapse, it asks? Probably not, because despite all the market distortions, there is really no need for concern. This time really is different. And I think I think that is a sarcastic statement at the bottom, obviously. And yeah, we should be getting ready for a collapse or something, and I think it's inevitable. And I think these big market investors, Sam Zell, for example, he's selling on the upshoot as the bubble increases, and he wasn't selling like 2 months ago necessarily. You know, he's waiting until the markets are near peak, and then he's going to start you know, selling when it's near its peak, basically. And then when the market crashes, he's going to take all that money and he's going to buy all the properties dirt cheap when everybody defaults and everybody forecloses on their houses. He's going to buy all those houses up and all the property. I don't know what he buys and sells, but he's going to buy all that stuff at dirt cheap prices. And the next bubble that comes around, you know, if the Lord tarries, he's going to sell it all again when the next bubble, when the market goes up again. So I think what the quote smart money they tell you, or they call it, I think what smart money is saying is that Sam Zell saw the 2007, 2008 crash, and he sold before it, and now he's selling again, which means he sees something coming, and it lines up with pretty much everything else we've been talking about. So interesting article from zerohedge.com, and I'll put it in the description there. Thanks for watching, guys. We'll see you in the next video.